In this video, we're going to talk about how to identify high probability setups using price action rules. The only indicator we're going to be using as a supportive indicator only is going to be 21 bar exponential moving average, this blue line working in the middle of these bars. Now, this is the structure that today started with, and we can see that we have somewhat of a bullish bias, and my goal is to always identify some form of a pattern because these candles are always following some form of a pattern. And what I can see is that we have a bullish uptrend working higher, and we have a break and a new extreme, indicating that the trend line rule played out. And after there's a break and new extreme, two instances can occur. Either the market will straight up reverse, or the market will enter a correction phase. And we see that the market has entered a correction phase because we have a move up, move down, move up. So prices are swinging up and down, up and down. Exponential moving average is no longer pointing up, it's getting flatter. And this structure is right now getting sideways. So my goal is to identify proper pattern. Since this is going to be most likely a trend range, I'm going to locate the support and resistance key levels as they may be important for prices to reach, and prices will respect these important key levels. So this is the structure right here. We can see that we have a downtrend working lower with the break, new extreme, and right now market is pushing back into trend range. Now, most breakouts of trend ranges will fail. But if you're not sure whether you want to fade the breakout just yet, the confirmation setup is going to be either high or low, or if you're really not sure what the structure is, you can wait for the trap, and the trap would be a failed second entry short above EMA. So we'll see if the prices will push above EMA. We see that we have a first leg down, pullback, second leg down, indicating that the bearish momentum played out. And we have new low right here. This is where we reset the count. Bullish leg working higher, first break below the bar low, and we have high low right here above exponential moving average. Now this is a decent setup because this high low right now is confirming the failed breakout. You're back into trend range, and overall sentiment in the market is quite bullish. So downtrend played out with the break new low, indicating that sellers are over. Push above EMA, indicating the bullish momentum may resume and prices may be back into trend range. And this right here is a high low confirmation setup of the failed breakout. Me personally, I wasn't quite sure here. I haven't taken this. I should have though. Now prices created a break new high, and now we see that even this uptrend has a break and a new extreme. So at this point on, I'm sitting on my hands because I'm not really sure what is the bias right now. It is getting way too sideways. Notice we have a failed second entry short, but already uptrend played out with the break new high. You're going quite sideways. It's close at the level of EMA, but after breaking new high, prices may correct stronger to the downside. So I'm paying attention and watching what the market will do. We can see that the market is going sideways, and notice what is happening. At this point on, we're starting to have what may look like a bearish imbalance, because if we're going to plot the middle of the trend range, somewhere around here, we can see that the top of the trend range is not being filled at all. So we have a break in new high. We are failing to reach the upper resistance right here. So this is indicating stronger bearish momentum and a weaker bullish momentum. But at the same time, notice we traded up into this trend range. So I have a couple more conflicting beliefs. And I want to take only a high probability setup, and a high probability setup means that all other factors will align. The context is good, the pattern is good, the signal bar is good, and nothing right here looks and indicates that the structure is clean for me to enter. So I'm just sitting here patient. Notice how EMA is getting in one of these bars, is getting too stacked. This is very low momentum, indecision, this is a congestion, and this is not what the high probability setup looks like. So I'm just going to be patient watching market go. We have another failed breakout, but is it safe to go along here? Well, not because of this massive bearish imbalance. Notice this upper half of the trend range is completely empty. You don't have consistent highs or lows, so quite difficult to pick what's going to happen. Now notice we have a nice strong push back into this trend range. So as I'm watching this, and the failed breakout was confirmed again, we can start to look for failed second entry short, reversal pattern. And notice what we have. We have high low here, but it only triggered above this bearish bar. It didn't even trigger above this bullish bar. It's starting to go sideways, and now it's getting completely sideways. We have 1, 2, 3, 4, 5, 6 bars right here. We have new high, first entry long, second entry long. Notice we have first leg down, pullback, second leg down. So it doesn't look that bad. And this uptrend needs to get new high, and we're coming from the bottom of the trend range. So this was quite tempting, but you have to reassess what's going on here. We see that we have 6 bars stacked. EMA is completely flat, and this bar ended very neutral. Given the congestion, given the neutral bar, lack of momentum, and you can see how tight this trend range suddenly is getting. Once again, the imbalance here quite strong, so that's another factor. Not really clean entry, so I'm just going to be patient. I want to follow the high probability setup, and you can see what would have happened. Can you go short? Can you take a failed second entry long? Not really, because you'll go short directly into this bottom of the trend range, which was a proven key level. You can see that the prices are respecting this key level. So this is one of those areas on the chart where a trader is really supposed to be patient and not to go long or to go short. Notice prices eventually created a nice big bullish bar and market continued pushing higher. As I'm watching this and I see break above this trend range, most breakouts of trend ranges will fail. So I'm leaning more towards the pullback into this trend range, or at least temporarily pullback to this key level. I see that the prices are pushing higher. I'm not going to fade the breakout because this is looking way too steep. This is too steep of a move. This is too bullish. I'm not interested in fading the breakout just yet. I want to take failed second entry long below EMA. And I can see that the prices are quite bullish, but still we have a trend range structure. This was not a particularly strong uptrend. So I'm leaning more towards prices going back and testing the area. We have a new high, first entry long, pull back, second entry long. Now, the second entry long worked, thought we were going to pull back at least a little bit. Now, this is a two-legged pullback. This is a second entry long, which would be a high probability setup under the right context. Is the context really that bullish here? Not really, because uptrend played out with the break, multiplex to a new extreme. We broke above trend range. This was a proven trend range. EMA kept holding nicely, and we have a break and new low of this downtrend. So if you're playing this as an uptrend, I can see why a trader would go long here. But, you know, rules say that we're going to most likely pull back and test, at least temporarily, this breakout area. And there is no clean uptrend at this point on. So I don't really like going long here just yet, because a lot of times you will truly pull back and you can get trapped going long above a trend range like this. Notice prices are pushing back lower and we have a strong bearish rejection. Now it's going to be the last chance, most likely, for prices to show its bias. Because if the trend range is going to be at a pattern, we're going to push lower and we're going to get a failed second entry long. And notice what we have. First entry long, pullback, but already is something a little bit complication here, because when we're taking a trap failed second entry long or short, we want it preferably to be part of the one move of the trend. And we already see that we have a break and a new extreme. There is no failed second entry long. And notice it's looking like prices are going to come back. And you can see we're almost coming back to test the breakout area a little bit, but prices are pushing back above EMA. And this was very important, because after we have a break, new extreme, and we have first leg down, pullback, second leg down, the failed second entry long was going to form if the downtrend is going to be the pattern. Excuse me, if the trend range is going to be the pattern. Because if the trend range is the structure, then the failed second entry long is going to form and prices will pull back into a trend range, following the trend range rule. But the fact that the downtrend played out with the break and new low and we pushed above EMA indicated that something is changing. The trend range is not the pattern. So I'm going to zoom out and I'm going to look at the structure. And since we are pushing above EMA here, this is where I'm going to locate a possible channel right here of these couple of swings. Okay, first two swings will stop the trend line. Third swing will confirm it right here. So I'm just going to copy it, put it at the top. And this is right here representing a bullish trend. It is not extremely strong and easy trend, but we cannot deny that from the very beginning of the session, we keep working higher. We have a push up, trading range, push up, trading range. So it's one of those flat channels, but I cannot deny that this is uptrend because we didn't trigger the failed second entry long and we didn't push back down. Okay, so this told me that the uptrend right now is the pattern and I'm just looking for high probability setups to go long. And notice we have a new high, first entry long, second entry long. So what's going to be a reasonable high probability setup after the second entry long above EMA, either high low or failed second entry long? As I'm watching this, I get quite a decent high low, and this was my first trade for the day. Actually, I took this trade high low confirmation setup of second entry long. It's nicely off the trend line, which what I really like, and the signal bar was so nice. And at this point on, I'm playing mainly the bullish bias, and a lot of times the high lows in this situation are very strong after second entry long, so a decent setup. Then you have a failed second entry short, but notice it's already at the very highs. The high low has room to this swing right here. The failed second entry short is also a double bar entry or stop loss has to go here. So not really a clean entry. I want you to take a look at this pattern, and we're going to talk about a similar pattern from yesterday's price action. We're looking at the same instrument, the same time frame, but this is a yesterday's price action, which was very similar to what we talked about today. Notice we have an uptrend, trading range structure, we broke higher, and here comes the dilemma. What's going to be the main pattern? Because this is not a clean uptrend just yet. We're pushing lower, and it looks like prices may pull back into this trend range. We have new high, first entry long, pullback, second entry long. And when I was watching this yesterday, I was also leaning more towards failed second entry long, but notice what happened. Felt second entry long, didn't form. Instead, prices pushed above EMA, negated the trading range structure, and then we have high-low confirmation setup of the second entry long. So the fact that the high-low pushed so strongly above EMA confirmed that the trading range is not the pattern, but the bullish uptrend is about to take over, and that's the pattern. So we use the same thinking today, and you can see that price action patterns, they repeat over and over and over again, and the structure behaves over and over and over again the same way. So if I'm going to zoom out right now, the structure is a clear bullish uptrend. So I'm only thinking about high probability setups to go long, second entry long, felt second entry short, or high-low confirmation setup. I'm going to zoom in back in, and we see that we have a prices working higher. We have a new high, we have a first entry long, pull back, and it looks like it's going to form second entry long, and we have a second entry long. Notice I'm drawing my trend line tight because this would be quite a too wide, and this looks like a nice two legs. We have first leg here, pull back, second leg here, and when it looks like a clean leg like this and I have sideways movement, the sideways movement here is separating the two clean legs away from each other. So I'm using the short-term channel here. We are with the main pattern, so I'm sticking mainly to the short-term channels for the corrections. I almost took this trade myself. I was basically about to take this trade right here because it looked like it's going to form like a nice bullish bar, but notice the doji it formed. Now the signal bar is just part of a setup. The context is more important, but sometimes respecting the signal bar can help you stay away from losing trade. But this is such a nice two-legged pullback, second entry long, and we also have micro double bottom here. I'm going to mark it. I almost pulled the trigger. I chickened out because I really wanted a better bar, but since it is a two-legged pullback at the key entry point, at the exponential moving average and small little double bottom, you have enough room for a swing. The structure is quite bullish at this point on, so this is a definitely decent entry to take a chance on, definitely if you have better signal bar. However, this signal bar is getting quite neutral, but the trend is quite strong. Now prices are pulling back lower. At the time I wasn't playing this. As I'm watching prices correct and the structure is bullish bias, I'm hoping for prices to push above EMA and give me a failed second entry short. Okay, notice it never formed here. Correction, we keep correcting, so it's starting to a little bit more bearish, but I'm still sticking to the main bias because the bigger pattern in price action will most likely take precedence over all the patterns. So I override the bigger pattern only as a last option that's left. So I'm always leaning more towards the bigger pattern. New low right here, first entry short, we have a high low here. But why the high low here is not good enough for me to take just yet? Because this high low is really not confirming much. Okay, this high low confirmed a nice second entry long, but what's going on here? We have a bunch of bearish legs working over. The bearish correction is starting to look quite strong, so this high low is really not confirming much. This is just a bearish mess, quite a strong correction. It is only a first entry long here, so this high low is not a good confirmation. And once I see structure like this, high low needs to form with the better context, and this is quite unclear, so I need to wait for extra confirmation. So I need to wait for failed second entry short. All right, first entry short, pull back. It looked like it won't form. I almost abandoned the idea, but notice we have a failed second entry short. And once again, this is a decent high probability setup because bears are about to get trapped going short on a second entry short in uptrend. New low, first entry short, pull back, second entry short, failure. This is a trap. But notice the stacked EMA, ladder bars, flat EMA in these bars, 1, 2, 3, 4, 5, 6. Failed second entries can sometimes form a stack like this. It is pretty typical sometimes because it just takes time for the second entry short traders to get trapped. Okay, so it is not uncommon to see a trap like this get a little bit congested, but at this point on, this felt quite congested to me. I didn't take this trade myself, and I'm not going to mark it. It is quite aggressive. I will mark it as aggressive entry right here because you need to weigh in the risk. You know what can happen if you're entering in a congestion, that you're risking getting stopped out on just possibly a little fake out. But the trap here is strong. However, the congestion needs to be respected. Now, you would be expecting additional long, but prices keep correcting lower, and prices keep correcting quite strongly. Notice we have an uptrend at these lows. This is where we identify the key entry point. And here we're going to see if the key entry point is going to hold and if the market geometry is real. And notice we are already having reaction of the key entry point and prices are pushing higher. Can you go long? We were making so many lower highs and lower lows each time. I think going long at this point is a little bit too early. Your idea is not wrong because this is the main key entry point that's right now getting confirmed. But with so many lower highs and lower lows, I would need to see push above EMA confirmation. We pushed above EMA, we pull back down, but notice the key entry point is still holding. We have a break of a key entry point, but key entry point needs to get the new extreme, the main uptrend needs to get new extreme. This is what it looks like on the bigger pattern. And notice we are pushing back above the exponential moving average, indicating that this main uptrend may come into play. We have high low, but notice the bar, very, very big, still below EMA. Not a bad entry, but I really want to see a failed second entry short. Can we get a failed second entry short? We get a failed second entry short all the way up to here, far away from EMA, which we cannot take. And then we have a continuation. I call this the reversal pattern trap, but this is not reversal pattern, but we can see it act similarly. When the failed second entry short forms far away from EMA, it's made trap. We can look at it as a visual failed second entry short. New low, first entry short, pull back, second entry short failure. Visual, because if you go on a larger time frame, which you don't have to go, but if you go on a larger time frame, you will see first leg correction, second leg up. So you would see visual second entry short failure. But once again, notice double bar entry. First signal bar is bearish. The second one is finally bullish, but it's so big. You know, look how far it's already moved. Your stop loss has to go one tick below the entire swing low. So you would put your stop loss here, you would enter here, and this is pretty big risk to reward ratio here, not really favorable. So I was hoping for a second entry long, never form, but this is visual failed second entry short. You know, next time you're going to see it and the failed second entry short is going to form better, you know this is a great setup and you want to study what's going on here because EMA keeps holding. Notice this trend line that you were able to identify very early is coming into play, and this is the key entry point, and this is where the high probability setups will appear because notice the big momentum it generated. This is where all the magic happens, and this is why we're trying to locate these key entry points. You don't need no Wyckoff, no indicators extra or anything like that, stochastic RSI to help you identify. It can all be done just by training your eyes to see it. Prices are pushing higher, but you would want to see second entry long. Do we get a second entry long here? New high, first entry long, pull back, second entry long, but this is a bearish bar below EMA. Can you get a high low here? Confirmation. We don't. Yeah, we don't get a high low here. A market is just pushing higher into close. We get a micro double top, resets the count. First entry long, pull back. I thought we were going to get second entry long. We never triggered. Market continue pushing lower. Now at this point on, even though we have a break in new high, you can see how strong the market is. We're not pulling back. We just keep pushing higher and higher above EMA. So you're still looking for longs. You're just letting these corrections play out. Market is pushing above EMA. We have a high low here, which is right now high low confirmation of the second entry long. But you're going long quite high. But this can happen in a trend like this, where sellers are going to get trap picking top. It generated quite a strong move up, but it is quite difficult to go long here. You know, I can mark it, but you really need to know what you do because this is a nice great bullish bar. This is just one of those trends there. You just have to trust the strength of this trend right here, and you need to identify the structure. You have a break in new high, but notice EMA keeps rejecting prices strongly. So it looks like the respect getting channel. It held here, got a break, new high now, and prices are finally correcting. All right, I just quickly switched to December contract, and December contract had very nice high low. Notice the first leg down, pull back, second leg down, larger two-legged pullback. Prices pushed above EMA and form high low confirmation setup. It was also new high here because you have a new high, first entry long, second entry long. That looks horrible. You cannot enter it. Counter reset, first entry long, second entry long. So you have second entry long, high low here. Great confirmation setup. So this was the great setup on the December contract. You can definitely make a case for a couple of more of these aggressive setups. For example, taking a second entry long bounce off of this key entry point is pretty good, or taking even this high low is pretty good as well because it is the first break of the channel. You expect for prices to create new highs. So there are definitely a couple more aggressive setups, but I'm only marking these really what I think are high probability setups. But every trader has a little bit different style, a little bit different mentality. So of course there are a couple more setups that are definitely still following the overall price action. We can see the spike on the channel keeps working higher. It even created new high, first entry long, pullback, second entry long, another second entry long. Even though it had a break here, it looks like the spike on the channel keeps holding pretty nicely. Just one of those trends where sellers are getting trapped, picking the top. So I hope you had a decent trade day, and I'm going to see you guys in the next one. Take care, everybody.